Hey, folks, welcome to Money Me. I do appreciate you taking the time if you're watching this on the replay. Um, I haven't done a video in a while, in all honesty, and several reasons. And the main reason was I actually had gotten COVID about a month ago. And so I haven't done any social media content up until about this week. So I now finally have, and even though I've been, resting and getting much better with COVID, I still view the market. But I'm not one of those guys. One of the people I watch on YouTube is Jeremy with financial education and Meet Kevin and stuff, and those guys have such. Hey, Craig, welcome. I appreciate you being here. Those guys have such large followings that I think they need to a lot of times put content out every day to for their subscriber base, and they're so reliant on. I don't make money doing this, full disclosure. I'm not a licensed broker, neither are those guys. In a sense, I do this for entertainment purposes. But what I tried to do is I created this channel, Money Me, here, is to basically talk about my experience trading stocks and dealing with business and dealing with money. Again, I haven't done any content for the past month because I'm just getting over COVID, but I definitely have been following the market. I've actually definitely still have actually been buying and selling some stocks, little amounts, and adjusting IRAs and 401ks that my wife and my sons are involved in, and actually have upped. If you guys follow me and you clearly can see, and I mentioned that this Dow would probably be down 35% this year. And we just hit under. I'm going to share a screen here, and I'm going to talk about a couple stocks that I've talked about. Let me share the screen. I do appreciate everyone that is here. If you guys are here and if you're looking in the background, you could just give me thumbs up. I'd greatly appreciate that. So here I'm showing the CNBC. Oh, Mr. Obvious. Yes, 3 more scheduled interest rates should fix some issues. Yeah, and I think the market, and I think the market, and thank you for stopping by. I do appreciate it. I think the market always gets ahead of the Fed, and we probably may buy. I said the market would probably drop 35% this year, and there are videos out there you can see I said that, and I'm talking about the Dow. Now, obviously, the Nasdaq is already down 30 some percent, and we are definitely in bear market territory. And it's been and obviously it makes sense. I wish I could have. I think the only opportunity I could have had was probably short some stocks, but I got burned shorting some stocks last year at the wrong time. And now, if I would have hung in there, I mean, there are some stocks that really have taken a beating. I mean, Netflix is down. Let me pull up. I got my phone here too. Netflix is down so far. Netflix is a buy though that we just recently did. Netflix is down year to date 70.87%. So let's go over the numbers real quick. Obviously, the Dow was down 38, which is nothing, 0.13%, but it did hit a new 52-week low today. The S&P was actually up 8 points, again, nothing. The Nasdaq was the strongest, but the Nasdaq has also taken the biggest beating. Down, it's up 152.25 or up 1.43%. I would not dump any large amount of money into the market right now. If you're doing dollar cost averaging, meaning in a 401k, IRA, obviously you're still going to continue to do them because it's the tax advantages and getting certain. Now's the time, honestly, to I think invest in boring companies. Don't be chasing these Shopify's and these Zooms and a lot of these stocks that basically through the pandemic went crazy, and some of those stocks will never go back, in my opinion. Of course, again, not a licensed broker here. Just share my thoughts with you guys. It will never go back to some of those stocks will never go back at the level that they were. So let's look at the Dow here real quick, and then I'm going to talk about a couple stocks that we're involved in. Now, it's funny because sometimes I get, I mention about SWN, Southwest Energy. It's a natural gas play. And I mentioned it was a buy, and we did buy it. It's 7 some, and it had almost touched 10, and we had basically a 37% move, and it's back down to 6 and change. So now it's a little bit underwater, but doesn't matter. Any moves that I'm making right now, as far as investing into stocks, are commitments that I'm making that a year or two, it doesn't matter. I don't know. It's a good question, Gordon. I actually think that would be a foolish move, because you just never know what could happen, and with any stocks. And I've seen that happen. I've been trading stocks since my 20s, and I've seen people do that. For example, with WorldCom, and I've seen people do that with the gas company that was based, the energy company that was based down in Texas, that was a sham, and they were actually talking and telling the employees to get in all that. I think honestly that would be a foolish move for anybody to actually recommend that, because you just never know what happens, and being diversified is much better. I could tell you that right now. The accounts that we are diversified in, as far as mutual funds, IRAs, 401ks, the hit on those has been a lot less than some of the individual stock plays that I've done. For example, like Fubu, I got hurt on, Tilray, and there's about 3 or 4 different stocks that in another account that we had too much in, and when they were going up, they were good. And even though I got into some of them, at 50% down, you think, how much further can it go? And the example, for example, and I got out of Fubu. The example with Fubu, that was at 28. Now it's $2.82. So Fubu for the year is down 82%. I'm rounding up. So I wouldn't put anything in any. I think even I did some earlier this year. I thought I was crazy not investing into Bitcoin and crypto, and I cashed in some scrap metal, about $300, and I put $300 into some cryptocurrency, and it grew to $400 in about 6 weeks, and now it's back down to about $150. At the end of the day, am I upset by it? No, because I didn't. Not always, Gordon, and unless it's a quality company that's making money. But some stocks, I mean, I talked about it. I just talked about it before. I told my family I was going to go live, and one of the companies I like, but I've always liked, is Disney. And you got Disney basically at $94, and it was $200 some. So I'll get into some individual stock plays. Let me show you basically the Dow is 52 week. If we look at just year to date here. I mean, look. I mean, we were up near 37,000, and here we are. Year to date change is down 17, almost 18% on the Dow. So we still got a way to go. I like I said, I'm predicting a 35% correction, and I think even if we bounce towards later in the year, we're still going to probably end the year down about 15 to 18% for the year. So probably this is where we will end the year, around this number. So even if we get a bounce and stuff, I still think that as interest rates are going to keep rising, because as everybody knows, everybody's getting beat up over inflation with the rise in fuel cost and everything else. But they're doing everything they can to slow the economy down, which and it's a complicated issue as far as the money that they gave out. They really printed a lot of money out over the pandemic, and a lot of fake, free money, and now they're pulling that in. So, this is going to be something to remember. There are people that are getting hurt though right now that may never invest again, and but that's always a scary part. But compared to what the banks can give you, what are you going to do? You still, yes, yes, for sure, Mr. Obvious, yes. Crypto is really, but if you go back and look at crypto over the last 15 years, there's been two or three other times that it has corrected 85%. So if it corrects, if Bitcoin, I think Bitcoin was at 69,000, and so if that corrects roughly at the same multiple, the same times, let's say 80% minus, yeah, you got about a 14,000 Bitcoin, and I think we were just hitting under. um, I got into it a low amount, $300. I made a couple dollars on it years ago. I have a little bit of Bitcoin, a little bit of Ethereum, and I did have other ones, but boy, some of them have really, the volatility of crypto really reminds me of penny stocks, and there are definitely going to be ones that will go away and probably never reach the heights that they did. So right now, the current quote on Bitcoin is 20,500. It's up less than 0.5%. But you got just in 1 week, and that's where we're going to talk about a bunch of things here. In 1 week, it was 29,000 down to 20,000. So basically, Bitcoin is down 30% just in the past week. Ethereum is down for the past week 35%. So probably even Ethereum. Yeah, I agree. I agree 100%, Mr. Obvious. I don't think we'll ever, and I think a lot of people are skeptical because really, what is it tied to? What is it backed by? If there's no liquidity, if there's people aren't willing you know, you kind of feel, I feel bad for, there was a lot of people, with what's going on in Ukraine. They talked a lot of people into getting into Bitcoin and crypto over there because of what's going on in the banking. And now those poor folks to actually probably see just in the past month to see their money drop by 40. Let's see, Bitcoin, I think it's been 6 weeks they've been in Ukraine. Yeah, it's down. It's just down in the past month, 34%. And people can't afford to be putting money in, especially when they're vulnerable, and then have lose 35% of its value in a month. That's to me, that's no liquidity. We know when the market corrects and things happen and there are opportunities. I mean, here you got the NASDAQ, and I am sharing the screen here. You got the NASDAQ down 31%, but the NASDAQ has a lot of those high risk, high growth, high beta, high PE names that you're going to get that. So with the market being down 35%, I predict for the Dow, you can clearly, the NASDAQ is going to be already right now, the NASDAQ is beating downwise by about 13-14%. So basically, we could have another, I think we could have another 15% down on the Dow, and also 15 to 20%. 15 does it stay there long? No, maybe not necessarily, because there are going to be traders that will take advantage of those opportunities. When you get those big Dow days, they'll trade stocks to make 5 or 8%, or they'll get wrapped up into options where, when you can get an 8% move sometimes in a week, and it's not expected on a stock on the option, you could make 150, 200% on those. Options are scary though. I've been into options, and you can lose your shirt fast on options if things don't go your way. I, for example, got into, and I'm going to share now the screen with Webull. I'm using this as the Webull desktop app. If you guys are interested, it's free. It doesn't you can use it, and I only got a couple $100 in Webull. I got in there because they gave me a couple shares of stock, but I got into Netflix calls last week at $1.50, $150, and I had 200. I'll put in. I'll show you Netflix. Netflix, I got in, and let's see the daily chart. Yeah, see if we can zoom in here. What's today's date? Today's the 17th. Yeah, it was like last Thursday. I basically got in Netflix calls at $1.50 for 205 calls last week, and I sold them for five $5. Made 350. I'm glad I did, because like the next 2 days the stock went down to like 170, and that was good. So that was a quick $350. That doesn't mean that my stock, obviously, overall, even in another account, there are a couple stocks that I'm nibbling at. We did get Netflix. I'm going to pull up I have my phone here too. I'm going to pull up my account. So I'm not giving up on stocks. I just wouldn't be plowing $10,000 into any one stock. And as Gordon Burns would say, if you had to put all net worth, I wouldn't. I just wouldn't do it. It just that doesn't pay. It pays to be diversified, because something stupid could happen. I mean, there are a lot of good quality companies out there that we know. Walmart, I mean, look at Target. Target has gotten hit because the consumers are just not out as much. Or don't forget, those stores, Walmart, Target, and certain bigger stores, and Amazon, they had advantages that they were a lot of times the only ones open when a lot of small mom and pops were shut down. So we got into Chewy, actually, and I'll pull that chart up. Chewy is a company that basically is sort of the Amazon of pet food. We got into Chewy at $30.93. It's now $29. Small positions we're getting in. We are not short nothing right now. We were short Five Below, and I shorted a couple shares, and I covered that. So Chewy, we are in, and we are down. It says 7%, but we don't have a large position. This is $1,000 position. I'll be honest with you. Disney, we are in. We got a couple shares of Disney. We are in Disney at 104. It's now at 94, so we are down about 8.5%. Disney, I would actually, I mean, I know there's a lot of political issues right now with Disney, and there's a lot that I don't agree with. I don't think a lot of these corporations should be getting involved in things that don't pertain to what their business is, but I guess the pressure from outside people, and politics, and it's just a shame. It's just, I mean, you go to Disney to have a good time and watch the stuff, and then it gets involved in, but hopefully a lot of those things will be sorted out, and Disney will still be a good a long-term company. I do like Disney. I mean, if you could see here on the chart, Disney was down to 79 when basically everybody shut down. I mean, Disney shut down for months that you never. I mean, Disney before the pandemic, they would shut down maybe once every 2 years for a hurricane. I mean, it was rare that Disney shut down. So yeah, I mean, it was down to 79. We could get back down there, but I'm slowly going to be adding to it. I like the stock. One of the stocks I own right now is Kohl's, and I like Kohl's. The market cap of Kohl's is actually in merger talks with a hedge fund that owns the Vitamin Shop. Kohl's were in around $41, 42, now about $42. So we're down to. Would you buy Disney over Netflix or Paramount? I actually like all three of those, and I really do. It all depends how much money you have. I would probably diversify in basically all three. And I will tell you, one of the other companies that we have, since you brought it up, is WBD, which is really down to $14. This was a spinoff. This is Warner Brothers Discovery. This is a spinoff from AT&T. Now it's $27.50 when they the second day they spun it off. Here we are down to $14. I got a bunch of, in a sense, free shares because it spun off, but I did add to the position, and our average cost is $19. So we are down. We only have 60 shares. We're down $300, but I like content. creators. I like content is always going to be. I don't care whether you're in a recession or not. You're going to sit at. Yeah, you're not maybe going to go and spend $15 for a movie ticket, but you'll sit at home and watch streaming and watch TV and good content that shows the the test of time that people can watch over and over and they can monetize. I think will always be good. And I like this company here. The market cap on Warner Brothers right now is the analysts, they have it. Yeah, they have it. I mean, look at this. And that's one thing here, guys. Don't take anything I'm saying right now as I'm telling you to go out and buy any of these stocks. Again, I'm talking about stocks that I'm interested in. I'm talking about stocks that I've invested in. I always talk about stocks that I've lost money in. I don't, you don't see me, oh, he never mentions about the losses. I tell you right now, last year we lost about $8,000 on Fubu. The year before, we lost about $10,000 on Roku. And Roku, had we stayed in that position just a little bit longer, had we stayed in another year, it would have turned in that $10,000 loss would turned into a $20,000 swing because it was over a $12,000 profit. I happened to be right, and the analysts ran it up. That's one thing I don't like, and that's one of the things why I wanted to make videos and do this on YouTube. I don't get paid. Honestly, you need 1,000 subscribers and so many watch hours. What I hope that people would basically lend an ear and say, hey, Pat, we enjoy what you're talking about. You seem to kind of have a little bit of knowledge about this stuff and, sharing some insight. Would I like to get monetized one day? Sure. But I don't obviously do this right now to, I like to connect with more people. I enjoy talking business and talking about, I've been a restaurant owner, a franchise owner. I have a business I sell online. I have another YouTube channel. That channel is monetized, but I do enjoy, the market and stuff. I don't enjoy and this is where I was going, is seeing analysts basically come out when stocks are $250 and saying it's a buy to $300, and basically you don't hear boo from them as the stock drops 60%, or they drop 60% and then they say a sell. These are supposed to be professionals. These are people that are getting paid hundreds of thousands of dollars, if not millions, managing money, and should know, and yet a lot of times they don't do no better than sometimes the average guy. That's why I always say dollar cost averaging is the safest and best long-term strategy. And historically over time, you'll still get, even though the market has hiccups like it's having this year, you're still going to get 10, 11% long-term return on a mutual fund. So as you can see, and I have Webull desktop pulled up, and you could sign up there. I don't have the link in below. I will afterwards put the link in below if you guys want to sign up. If you do, I get a free share stock. I think you get 2 or 3. But you could use these tools. Use the tools instead of paying a professional. Now, there are people out there that have millions of dollars and pay professionals. And obviously, they have if people have a good track record and have a certain strategy, that's fine. I mean, I know people with money that have professional people, and they always seem to do fine. Yeah, exactly. I agree. But there's a lot of tools out there with using Yahoo, Google, CNBC, and Webull, and there's a lot of things out there that you could kind of really do a lot of your own homework. And I don't want anyone ever to say, well, Pat, you said to buy this stock. I mean, I have people. I said I finally packed it in, gave up on Webull at 350, and people call me basically a dumbass because I admitted that I lost money and gave up. And you don't know what you're doing. It's going to go. It's going to. If it does, it does. I mean, I've been in and out of stocks years ago that went both ways. When I'm glad I got out, and there's ones I wish I would have stayed in. But that's part of investing. That's what happens. So. The next stock I'm going to feature, I own a little bit of, is, believe it or not, is Winnebago. You would think, wow, because of the price of gas, why would you own Winnebago? Now, I don't own a lot. We're talking about a $500 position. I'm in at approximately 49, so yeah, down about 12%. And I like the company. They have a backload of they always have a certain amount, only RVs that they can make and stuff, and the population that can afford to pay the gas are buying those. I mean, look at the target. The low is 40, but the average is 96. that's one of those companies that will do obviously terrible when gas is high and stuff like that. But gas is high now, but it's not. 2024 is an election year, and always amazing. I don't care who's running. Every election year, gas always seems to settle back down. So we're probably going to deal with this for a while, and hopefully somebody will start demanding and saying, "Hey, look, it's gotten out of hand." I'm here in Pennsylvania, and I paid $5.20, and what's really hurting is buying even oil that's close to $6 to fill up the heating oil in the house. I own Southwest Energy, which I talked about. I like it. I mean, that's a big nasty red candle this week, and bought it and we bought it in the sevens, and it was almost at 10. I think it goes to $12-14. Historically, they have a target here of $11, and we're holding on to it. We own a couple hundred shares of that. We are down. In the one account, we're down $125. We were up $450, but it's no big deal. I'm not worried about it. There's always going to be a need for natural gas, and a lot of times those types of those commodities and that type of companies, because they've hedged that and they aren't maximizing the high price, because they've already sold contracts to companies to say, hey, even though it could be $8, let's say the price was $4, we'll hedge it and sell it at $5 or $6, because they need that predictable income, and they do that. Another one that we're in, and so in this one account, even though it's a small account, 1, 2, 3, 4, 5, 6, 7 stocks, we're in nothing short right now is Lyft. I like bank stocks. With interest rates going up, they've got to make more money. Bank of America, your Chase. I don't know what your Wells Fargo is. Lyft it got hit. Lyft, I think the drivers are getting hurt. Lyft, we're in at about $3 higher here, so we're in about $18. So basically, most of the stocks that we're in right now, we are about 12% underwater. In the 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 7 stocks that I mentioned here. Let's look at Bank of America. 32. They're raising interest rates. They're obviously going to make more money. That's how I feel bad, is that people now that want to be in the middle of buying a house, like I explained to my son, if you got a $200,000 mortgage and the interest rate goes up 2%, you're paying $4,000 more pretty much a year in interest. But artificially, maybe interest rates were too low for too long. I could still, I remember stories back when I was 10 years old, back in the early 80s, people talking about paying 15-20% on their house mortgage. Maybe we got too used to 2 to 3%. You can still you could still find what's going to happen is the price of houses will go down. You can still do okay. I paid 7-8% probably for 15 years in my mid 20s, 30s on a house. And we just didn't, honestly, when we bought a house, we just didn't overextend ourselves. And, they say, oh, you qualify for $150,000 house. And, no, we're happy. Our first house we bought when I was 23 was $70,000 in Pennsylvania. It was a 3-bedroom, half a double. There was a middle room that you walk through the bathroom. The downfall of that house was it was a small bathroom, but a 2-car garage. That same house now, it's 23, about 20 some years later, is probably worth about $120,000 now. Is that a lot? $50,000 over 20 some years? Not really. You gotta feel for people though when you see stories of people having to pay $2,000 average rent. It's just crazy. I've been a landlord for 20 years. I'm not no more. My son is now, but I'm as I get older and dealing with some health issues, I've basically cut back with certain things like that, so that for tax purposes and estate planning and stuff like that, that the kids can basically, deal with those issues if something happens to me. So, um, yeah, so that's the thing with the market. I wouldn't. I pulled up Bank of America. Let's see what I mean. Obviously, the banks are gonna. I think what's going to happen though. I think in 2024 there's going to be a lot of maybe they'll start. We probably have a lot of pain the next 6 months with the market dropping another 15%, interest rates probably going up another 2%, and then all of a sudden they'll wait and see how 2023, what things, and then all of a sudden election year, we got to lower interest rates, we got commodities got to, and I hate that they play games like that because a lot of people, the average person can't afford to, a lot of people live paycheck to paycheck, week to week and stuff like that. So, hey guys, we're at the 30-minute mark. I do appreciate the several people that are here and did watch. And if you're watching this on the replay and you want to comment below, please comment below. Give me thumbs up. If you haven't subscribed to the channel, it's called moneyme. I try to do different videos talking about all things money. I haven't done much videos lately. I'm not one of those guys that just want to push a video out. I'm not getting paid to do this. So I don't just want to push a video out to just kind of throw out content out there or repeat myself every day and come across negative. I honestly think when market happens and stuff like this happens, people want to kind of, they want a calm voice. Like I talked to my wife yesterday. Hey, as long as we got our roof over our head, we don't drive as much, we're still going to kind of do some things, but we're budget and you got to, time is more important than money. And yeah, nobody wants to lose money and stuff like that. And it sucks that when you take the advice of professionals and analysts and, who talk you into buying, Netflix, perfect example. Netflix was $701. You got to feel for those people that bought it then. Since Paramount was brought up, let's bring, I like Paramount, which used to be basically CBS, 2456. I'm kind of surprised that a Netflix or a Amazon hasn't bought one of these companies to have more content. And then instead of paying, Netflix and Amazon are putting out billions of dollars to create shows and new content and stuff like that. But they also have to pay. Now, I'm not sure, maybe they have a licensing agreement, whether they have to, let's say a movie from 30 years ago goes on to them. Do they give a little bit of money and then basically if it gets watched, they get, money that way too? Maybe that's a cheaper way instead of just buying. But I'm sure they walked in and bought one of these companies, which they definitely can afford. Now, some of them, they should have probably been buying some of these assets when their stocks were much higher because, now Amazon, you may say, oh my God, it's 106. It was just 2,300 or 700. Well, yeah, it just did like a 20-for-1 split. So basically 88, Amazon is still down about, and let me pull that up real quick. Amazon. See, I don't like to just guess. Amazon year to date is down 36%. One of the stocks I like, and that's, it used to be called Facebook, now it's called Meta. 385 down to 163. But boy, when the market corrects, I mean, you could have a stock that trades at 12 times earnings, and then all of a sudden the stock is trading at, you think, okay, what's 10 times earnings? That could still be another 15 or 20% down. Facebook, Meta, is trading at 12 times earnings. Their revenue is $120 billion. Their market cap is $445 billion. They are down 51% year to date. But man, I can remember, and that's what gets me nervous sometimes about certain stocks, is I remember when Disney was $25 15 years ago. So when you sometimes look, and If you go back to certain levels of profitability, even go back, 7, 8 years, some stocks could have a long way to drop on some things. So that's why I wouldn't throw $10,000 in at anything. I would dollar cost average. I would nibble. Everything is also based on your age, how much money you have, how you've been doing with the market. Obviously, if you lost $30,000 or $40,000, there's professionals I follow on here on YouTube. Meet Kevin and Jeremy, that financial education. Let me pull up there and just so you know who I'm talking about too. Okay, so let's go to here. Here's the financial education. Now look at him. He has 726,000. This is a young guy, lives out in Vegas. 2.8 million. Now, keep in mind, I mean, nobody wants to lose money, but based on what these guys, I mean, this guy's making at 2.8 million views a month and 42 videos. Jesus, but he's making honestly at 2.8, he's probably making 30,000-40,000 a minimum a month just doing YouTube. So at $400,000-$500,000, and they've done videos where they've talked about what they're making at $400,000 or $500,000 a year. Even if they lost $1 million, I mean, they've gotten half of it back just in YouTube income because they have such a following. I don't have that luxury, and neither does anybody else watching this. So we can't always take the advice that they do. We can try to educate ourselves and watch them and look for opportunities, but there's no way that we can mimic exactly what they do. Meet Kevin, 1.8 million subscribers. I mean, this guy, is probably making $1 million a year doing YouTube. And if you look at all his videos here, he's holding his head or it looks like he's crying. So, he's under a lot of pressure when you're losing several $100,000 or $1 million. I mean, these guys, Jeremy had Tesla. I mean, Tesla was a $1,100, $1,200 stock. It's now $650. And you get a guy like him that is owning $1 million and sitting there looking at, I lost $500,000 on Tesla. That hurts. So, all right, guys. Hey, I do appreciate it. I will try to put out more content, and subscribe to Money Me and comment below. You guys have a great weekend and take care. And happy Father's Day to all the fathers out there.